I'm making his dog like I'm in the big leagues. Told him that I gotta go, dog. I'm running a road, y'all. I think that I'm back in my bag now. So I need that go, y'all. Got hits when he throwing the fastball.
What's up, guys? Austin from Austin's Trading Group back again with another technical video. Today we're going to be talking about the Fibonacci retracement tool. The Fibonacci retracement tool is a very powerful tool, something I use a lot in my personal trading strategy. So I definitely want to share this with you guys. If you've never seen one of my technical videos before, how they work is I do a whiteboard explanation and then we hop on over to the charts on a nice charting software. I use tradingview.com. And I give you guys real market examples of everything I'm showing you. So I'm going to draw it first and then we'll hop on over to the screens, but for now let's just jump into it. So with the Fibonacci retracement, it is very important that you know how to identify two different types of legs of price action. Now, if you can't identify these legs, you're going to have a very hard time doing this and it's just not going to work. So you need to know how to draw your fibs on the right legs. So you have two different types of legs in price action. You have impulsive legs and you have corrective legs. Write this down if you guys don't have a notebook or piece of paper or something just to type notes with. If you don't have that, get that now because this stuff is pretty important. So your impulsive leg is going to be your fast aggressive legs of price action. These can go in either up or down directions, but they are quick, very aggressive legs that you'll be able to identify them once you see them. So typically what they look like is this. So draw an S, but there we go. Impulse. So your impulses are your corrective leg, or your fast, aggressive legs of price action. So you can write that. Fast. And this is a very important element to an impulsive leg. They are fast, aggressive legs that take out a previous low or high. So very important that you guys know that. Fast, aggressive leg that takes out the previous low or high. You can see right here, this leg came down and just took out the previous low. This is your previous low. And you can see that leg came down, took that out, and it created a new low. So that is your impulsive leg. Now your corrective leg is going to be right here. Oops. So your corrective legs are going to be slow, choppy legs of price action, and these are going to typically lead to an impulse. So impulse leads to a correction, correction leads to an impulse. So let's just go over here. I'm going to write this again, corrective. Write some bullet points under here. Okay, so corrective are slow and choppy legs that usually lead to an impulse. Those are the two bullet points that I want you guys to write down. So here, corrective, choppy, impulsive, fast. So impulse, correction, impulse, correction. Now, this is where the Fibonacci retracement tool comes into play. Typically, well, not typically, always, when you draw your fibs from your impulse, that's how it goes, we'll get into that, it's going to plot a bunch of lines, and what you want to do is time out where your correction is going to stop. And that's essentially how you take advantage of the Fibonacci retracement tool, by finding the ideal area that the corrective leg is going to reverse, and then you catch the impulse down, or you just catch a retracement. There's a bunch of different ways to play it. We're not really going to go into how to play the fib level or fib levels, but we're going to just more so focus on how to plot the tool and what levels are important, things like that. So when you have your impulses, let's draw this. Okay. Always draw your fibs from your impulsive leg. So rule number 1, always plot fibs on impulsive leg. Fucked up G, we're good. So always plot your fibs on your impulsive leg. So here you can see this is the start of the leg, this is the bottom. Fast, aggressive price action that took out the previous low. So now you would, in a downtrend, you're going to be going from the top to the bottom. So put this here, bullet points. Okay. And then in uptrend, take a guess. Draw from bottom to top. Okay. So in uptrend, bottom to top, in a downtrend, top to bottom. In this example, we are in a downtrend, price is moving lower. You can see we draw a trend line here. Price is moving lower. So we start at the top of the impulse and draw to the bottom. So on your tool, on the charting software, you're going to see it's going to plot a trend line. So plot the line, and then this will be your 0%. Or other way around. This will be your 100%, and this will be your 0%. And then you'll notice that it's just going to start plotting a bunch of lines. Those lines are going to have different values added to them. Your software might even have a bunch of backgrounds and weird shadows and colors and shit like that. We're going to turn all that off once we get over to the screen and I show you guys how to draw it on the software. But what it's going to look like is you're going to see these lines. And there's going to be like one here, one there, and like a couple here. So that's what the Fibonacci tool looks like. So what we're going to be doing is always drawing from the top to the bottom in a downtrend, drawing from the bottom to the top in an uptrend. So in our uptrend, okay, so uptrend, so then same thing, this would be your 0%, this would be your 100%. And when I say these percentages, you might not know what that means if you've never seen a Fibonacci tool drawn before. If you have drawn a Fib tool before, you know exactly what I'm talking about. And if you don't, you'll know by the end of the video. So yeah, it's going to plot all these lines. And you can make decisions off those lines once you know which ones are important. And there's a bunch of different other factors go into making technical trade decisions in any trading decision. But basically with the fibs, just like any other technical aspect, we're going to be using these as a confluence. I use this word all the time. Confluence is just a word for reason. And you want to have a bunch of confluences behind your trading idea, because that means you have a bunch of reasons that the trade is going to go in your favor. The less reasons you have a trade is going to go in your favor, the lower the probability that it's going to work. The more reasons you have that a trade is going to go in your favor, the higher the probability it's going to work. So you always need to know, 1, how to identify those reasons and confluences, and then 2, be able to spot them on a chart and hopefully be able to stack them on top of each other. So let's just do a quick note recap. So make sure you have this, impulsive, our fast aggressive legs that take out a previous lower high. Drew a little example here. And corrective are slow and choppy legs that usually lead to an impulse, sideways movement. Always plot fibs on your impulsive leg, always. In a downtrend, draw from the top to the bottom. In an uptrend, draw from the bottom to the top. So now that we've covered the whiteboard example, let's head on over to the screen and I'll show you guys exactly what this looks like on trading. What's up guys, Austin from ATG. This is the on-screen example for the Fibonacci retracement tool. And the first thing we are going to want to see here is that we have this leg ripping lower. We see that it's made a lower high here. So you can see we have a high, rips lower. Here's a new lower low. Here's a new lower high, rips lower, new lower low. Now, one thing that we can also notice is that this leg just immediately reversed, ripped higher, and took out that previous high that it had here. Now, this example is a little bit choppy, but this play perfectly makes sense, and we'll even find another one just to validate this whole idea again. If you can't do it twice, or if you can't do it twice, then it doesn't count. Didn't really know which way the saying went, but that way works perfectly. So we can see here, draw the fib from the bottom, go to the top in the example of an uptrend, and we have retracement down to that 78.6 level. I use 79% personally, but this is just a random free trading account or TradingView account that I set up to make these videos for you guys. I'm using TradingView as this charting software. You guys can use whatever you want. The levels on here are some of the levels that I use. I don't use 23.6. Everything else I leave on here, and I also round up my 61.8 to 62%. TradingView is going to have it at 61 for you, and I also use the 72% as well, or the 71%, sorry. But yeah, it's usually how I have it configured. Mine are colored differently, but this is just like a stock layout that I switched up. So you can see here we have a retracement down to that 79% area, and then boom, price goes up. So let's do it again just to show you guys that the whole theory makes sense and it does work. Let's go even lower if we want to. You can see here we have our high, price comes down, boom, breaks the high, even rips higher and higher. So we'll just use that whole leg. Since this is a 1 hour chart, so on a 4 hour this would look a little cleaner, but we'll just do it on the 1 hour for this example. You can see, drop from the 100, go to the top of the leg, thing rips down right to that 79, and then starts playing off of that. So fibs are super important, guys. They work over and over again. I'll show you here as well. And I'm not going to tell you guys a specific strategy off this, but you can use your imagination. Comes down, plays right off these levels pretty perfectly. So this is a very, very powerful tool. Do not sleep on the fibs. Some people prefer not to use them. I've been on and off with them for a while, but right now they are a very, very important part of my current trading strategy. So I love the fibs. But yeah, guys, I just wanted to show you how to properly illustrate them. Not really going to go into too many strategies based off of fibs because there's tons. I personally developed my own strategy using them as well. Not really going to dive too much into that in this video, but just wanted to make sure that you guys are properly educated and know how to draw these fibs, and just know what's going on. There's a lot of nonsense out there, so I feel like it's my duty to show you guys what's up. So those are a lot of good bullish examples. We can even go here to that leg that we used for our first example. Go to the downside. You can see price rips down, comes up, plays off the levels perfectly. Yeah, there's opportunities all over the place, so you just need to know how to spot them, look for your impulse, wait for the corrective leg, and then go from there. And it usually always ends up correcting off of a fib level. So let's just see. Yeah, I mean, like, come on, guys. Every single example makes sense. Every single example repeats itself, and that's what you want, something that's consistent and something that's repetitive. So I hope this video was valuable to you guys. It's going to be a little bit more complex if you're just getting started out with technical analysis and trading, but take your time, watch it over a few times, jot some notes down, and go from there, guys. But anyways, I'll see you in the next video. Thanks for watching. Peace.
I'm making his dog like I'm in the big leagues. Told him that I gotta go, dog. I'm riding a road, y'all. I think that I'm back in my bag now. So I need that go, y'all. Got hits when he throwing the fat.